Hello, I am Rakesh Khanna and welcome to this week Commodity Forecast, wherein we analyze what's driving commodities this week and what it means for prices ahead. If you too regularly track geopolitical developments and their impact on commodity markets, then this video will make for essential viewing. In today's video, gold and copper will be the spotlight. So stay tuned till the end for crucial support and resistance figure for both these metals. Let's start with macroeconomic headlines. US rejected Iran's war-ending proposal by calling it as unacceptable. This development has reversed some of the optimism seen in the previous week, while Iran has also signaled not to bend down to US demands. Iran reportedly offered to transfer a portion of its highly enriched uranium stockpile to a third country but refused to dismantle its nuclear facilities. Tehran instead focused on an immediate end to the war, the release of frozen assets, and the payment of war damages. The US economy added 115,000 jobs in April, far exceeding expectations, with the unemployment rate holding steady at 4.3%. Employment rose across several sectors including retail, transportation, and warehousing and healthcare. US year ahead inflation expectation eased to 4.5% in May 2026 from 4.7% in April, while the 5-year outlook dipped to 3.4% from 3.5%, University of Michigan data showed. US Treasury yields fell across the curve on May 8 as the 2-year yield declined 3 basis points to 3.893%, though it rose 6 basis points for the week. The 10-year yield also fell 3.2 basis points to 4.364%, declining 1.3 basis points for the week, the largest one-week yield decline since April 17, 2026. The 30-year yield dropped 2.7 basis points to 4.947%. Asset managers were net sellers of Treasury futures for the third week running, unwinding long position across most tenures, with the biggest net long reduction seen in 10-year note futures. China's April trade outturn beat expectations. Both exports and imports surpassed consensus forecast in April. In US dollar terms, export rebound to 14.1% year-on-year. Bloomberg estimated 8.4%, March 2.5%, while imports remain elevated at plus 25.3% year-on-year. Bloomberg estimated 20%, March 27.8%. The monthly trade surplus widened to $84.82 billion, recovering from a 13-month low of $51.13 billion in March. China's factory gate price rose at the fastest pace since the pandemic as the Iran war drives up global cost. Producer prices increased 2.8% in April from a year earlier, up from 0.5% in March and above the 1.8% consensus. Consumer inflation also rose unexpectedly to 1.2% from 1%. The yuan gained up to 0.2% past 6.8 per dollar. India's final April manufacturing PMI was revised down to 54.7 from an initial 55.9. It moderated from February 56.9 but still above March 53.9. The softer reading was driven by slower growth in the new orders and output, with firms citing stronger competition and greater client risk aversion amid elevated global uncertainty. Focus of the week should revolve around the US-Iran development along with US CPI, PPI data followed by weekly jobless claim and retail sales data. Commodity focus. Gold. MCX gold futures continue to trade in a consolidation range on the weekly chart. The upward trendline breakout and higher high higher low formation indicate that the medium-term trend is bullish. The prices are above the key long-term moving averages. The metal is sustaining near the 0.38% Fibonacci retracement level around rupees 1,53,800 zone. The immediate support is at rupees 1,50,000 and 1,51,000 and major support at rupees 1,45,500 and 1,46,000. If prices rise above this support area, the bullish structure is likely to remain intact. On the upside, immediate resistance is seen near rupees 1,55,500. A sustained breakout above rupees 1,55,500 may trigger fresh buying momentum towards rupees 1,60,552 and rupees 1,67,272 in near term. The MACD indicator indicating improving bullish momentum on the weekly chart. Overall, the broader trend remains bullish, while short-term movement may remain volatile within the current range. Commodity focus. Copper. MCX Copper Future continued to trade within a positive bias on the daily chart after a pullback from lower levels. The base metal has formed a higher high and higher low formation, supporting the ongoing upward momentum. The prices are sustaining above medium-term moving averages, indicating a bullish structure. Copper is trading above rising trendline support, reflecting strength in the broader setup. Immediate support is placed near rupees 1300 and 1280 level. On the upside, immediate resistance is placed at rupees 1340 levels. A sustained move above rupees 1340 levels may extend positive momentum towards rupees 1380 and rupees 1420 levels. The positive crossover in MACD indicator indicates bullish momentum. Overall, the broader trend remains positive while price continues to hold above key support levels. Weekly price action. Gold rose by 2.19% week on week. Silver rose by 6.61% week on week. The gold-silver ratio fell by 4.14%. Base metals recovered too, except for aluminium and nickel. Weekly event calendar. This week, market will track existing home sales MOM, ADP weekly, employment change, initial jobless claims. That's your weekly commodity forecast from Mirae Asset Sherkhan. What is your take on commodity markets? Do you think gold can sustain a bull run again? Share your thoughts in the comments. To help you keep track of other market developments, all our research offerings are now available in one portal, the Mirae Asset Sherkhan Research Center. Explore research calls and detailed research reports across equity, mutual funds, future and options, commodities, ETFs, and more. Scan the QR code on the screen to begin your 15-day trial today. Kickstart your wealth creation journey backed by experts. Thank you for watching.
Investment in securities market is subject to market risk. Read all related documents carefully before investing.